Hello, Oracles. Welcome to Thursday Night Oracle Live. Lots to go over today. Obviously, an exciting week. Stock market was extremely excited by the outcome of the presidential election. We won't get into politics on this, but just the reaction of the market itself was obviously very positive. Perhaps it would have been if Harris had won as well. Don't know at this point, but either way, very good week for the stock market so far. And of course, it hasn't been everything. There are some sectors that haven't performed well. Obviously, the sectors that are going to be, favoring Trump and Trump's administration would favor did very well. So we're going to do a bit of that today. Obviously, with the FOMC meeting today as well, we got the 25 basis point cut as we had expected. Kind of got some information from Jerome Powell, questions about how he would feel if Trump fired him or whatever it was. Kind of more of the expected there as well. So we'll get into that also. But overall, a great week. I had some buying opportunities. Glad I took some buying opportunities. Again, following my plan. I saw some BDCs were getting pretty beat down. I added to them going into the election just because that's what my portfolio told me to do. And guess what happened? It all boomed up on yesterday. So it was great. What's going on, Dominic? How are you? Hanif, what's going on? Yeah, it has been a weekend. Tesla stock itself, and I know most of you guys on here are huge Tesla fans, and my goodness, up 15%, really pushing that $300 mark. And we kind of knew that was going to be the place to break. 295 to 300, and 300 being the psychological level. We knew it was going to be a tough one to break. So we're kind of bouncing on that right now. Will we push through? We shall see. After the 300, if we end up breaking it, the next level above that is going to be 314. That 314 level is what we bounced off of 3 times prior to this and could not break through. So we really need to pay attention to that if we get past it. Oh yeah, late there. And I do love, I love how you guys are from all around the world. One of my favorite things, when I was doing my races, my Spartan race in Iceland, I got to meet so many good people from around the world. And I really, after doing that and meeting people, I really encourage a lot of people to go out there, travel the world. It is not what the media portrays it to be at all times. There's a lot of really just genuinely awesome people all around the world. Go out there and meet them. They're fantastic. Sith Lord, what's going on? And speaking of Sith Lord, I do want to thank, again, Darth Dividend for coming on the channel last night. If you guys did not see it, I posted that live stream that was up yesterday. You guys can go back and watch it. We discussed a lot of different things about dividends. Dividend REITs were a big one. He's very much into REITs. Discussed a bit of the high yield ultra, like the yield max ultra yield dividends, things like that. Because for me, I got out of some because of the NAV erosion, but I'm getting myself back into a little bit of them just for income generation. So I'm going to be toying with that and playing a little bit. We discussed a lot of that, a lot of, even dividend growth stocks that are out there. So great discussion we had yesterday. TSLA split? No. Tesla will not be splitting anytime soon. Yes, it's booming, but don't forget, when you see stocks move the way they did the last 2 days, that is an emotional, sentimental swing. And whenever that happens, there's always an over-exaggeration. Now, of course, again, in the long term, it's going to always go up and to the right overall for the broad market, not individual stocks specifically. But when you look at the moves that we saw yesterday, that is just kind of due for a sell-off. It's typically, and I don't know how much higher it's going to go. Maybe we go into the end of the year, but typically moves like that are usually over-exaggerated, and there's typically a reversal, whether it's one way or the other, whether it's a massive over sell-off or an over purchasing. And actually, I'm going to take a quick look right now. Kind of curious about the fear and greed index, because we were pushing extreme greed prior to the election. We are in greed right now. We're at 60 at greed. So not to say we have to go one way or the other, but being in a greed right now, we could go higher. We could push higher into the end of the year and get into extreme greed before we sell off. Yeah, so that's kind of, one of the things that I pay attention to. So for me, it's not like I'm going to go and buy. I had a coworker who was like, "Oh, now is the time to buy." And I'm like, "Well, the time to buy would have been when everything was beat up. And now you get to enjoy that extra ride as it bumps up." And now at that point, in my view, and obviously everybody's different, everybody's risk tolerance is different, and this is not financial advice, but when you see a move like we saw, that now becomes a gambler's move, a swing trader's gamble is, are we going to go higher or not? Obviously from an investor's standpoint, chances are you're going to take a look at that and say, maybe that jump up there was too high and you don't want to buy into it. For me as a value investor, too high. I wanted nothing to do with a lot of those stocks that were going up. Again, I think Tesla is going to be great long term, but with it moving up as much as it did, probably going to end up getting a sell off. And there's going to be chances to buy later. There's always chances to buy. And if you're confident that the stock, let's say Tesla in particular, is going to be going up for the next 50 years, is there really a bad place to buy? No, not really, because if you plan on holding it for that long, chances are, regardless of where you buy it, it will be higher down the road. Into Coney and Misty short term, okay or not? So Coney I own, did very well with it. Now a lot of these yield max ones are kind of a little based off of timing, and again, I'm not one that's big on timing the market, so it's a little off of my strategy. But because of what I'm using them for, I kind of take a look at the underlying security that they play off of. So, for instance, MicroStrategy, if you think cryptocurrency and Bitcoin are going to continue doing well, that could be a good one to stay into. Now, that is one of the best performing yield max out there to this point. But I've also seen Tesla do very well and then sell off, and then they reverse split. And the NAV erosion on that has completely destroyed the ETF. So at this point now with Tesla moving back up, maybe now's the time to get into Tesla. Again, it's one of those. Again, I don't like the timing of it, but for short-term income moves, could be worthwhile. That's why I'm looking at them now, and I'm really not buying into them. And I'm going to be kind of dipping my toes in more than anything. Probably won't even happen until end of this month, maybe end of the year. And at that point, I may have a different view as to what's going on in the macro economy. If I think that we're going to get into a recession, and I do think we are, but if I really think that we're going to be getting into a recession next year, I might hold off altogether, because a recession, don't forget, these ultra yield ETFs, yield max ETFs, and everything see the entire downside. So while, yeah, you're going to be getting a great yield, maybe it's going to be 60%, but if you lose 50% of the equity value, 60% is not what it used to be, and you're actually losing money. So you really have to pay attention to that. So Misty, I think, is awesome, especially for anybody who bought in earlier. Again, for me, I bought in early on Coney. I have more than doubled my money on that. I can lose everything right now, and I would still be net positive on Coney. Anybody who bought Misty earlier this year would have been the same thing. So I'm kind of looking at Misty's one of the ones I'm going to look at. It may be a little too pricey for me right now. I may stay away. Um, but I'm going to look at FBY. I'm going to be looking at AMZY. I'm going to be looking at BITO. That is out of ProShares. That's a different one for Bitcoin. There was another one I was going to be looking at also, but there was a few that I put on my list to pay attention to. Let me see. Jonathan Brown, hello. Question: I was looking into stock, crypto, ETF. How does one go about starting to trade and buy stocks? Very new. Find a broker. I don't know what country you're in, but the first thing you've got to do is find a brokerage to be able to trade through. So, here in the US, I've got Schwab. SoFi actually is probably my favorite, just because you could buy fractional shares in there. So SoFi is awesome. There's a lot of great ones in the US, but I would need to know where you're from. But whatever country you're in, definitely find a brokerage and start there. That is the number one place to go. And I can't give financial advice, but for somebody who's new, just starting to learn about the market, watch a lot of videos, not just mine. You can watch, a lot of different people out there, but basically the S&P 500. That is kind of the baseline. So starting with the baseline is the best place to go. So start with that, and then take a look at the top companies within the S&P 500. So you can go with an SPY or a VOO. They're both basically the same thing, tracking the S&P 500. And then from there, just learn about those companies, learn how to read financial statements. Again, watch a lot of videos that are out there about that and just start there. But if you just want to, if you've got the money and you want to just start investing, start with the S&P 500. Start doing a little bit there, and then you're fine. And then from there, educate yourself because ultimately you've got to do your own due diligence and research to determine what your risk tolerance is, what companies are going to be right for you, and what your goals are. So everybody is entirely different. Uh, continue DCA and Tesla. I'm losing about 20%. Yeah. Yeah. See, that's why Tesla it's tough. And again, looking at those swinging in and out of them, for instance, if I buy FBY, for instance, and they continue to do well, and I liked it's a little bit lower on the volatility. So the returns may not be as good, but it keeps the NAV erosion down as well. But all of a sudden, if I see a massive tech sell off, then I might dump out of it because I don't want to recognize the entire downside because as it comes down, that again, that yield may stay the same, but you're getting a yield on a much lower share price, which means that you're going to be getting paid a lot less. Pops by Bitcoin. Oh man, yeah. Bitcoin, any cryptocurrency that is definitely a much higher risk tolerance. And again, not to say it's not going to do well. It has significantly outperformed the S&P 500 in the last 10 years. But man, you got to pay attention and really know what you're doing there and have a high risk tolerance. Wealth simple, yeah. Yes, pops. Yes, it has been a long time, and thank you guys for all sticking with me and coming back. I truly appreciate all of you guys being here. Um, yeah, yep, 300's coming. I have no doubt. Even if we bounce off of 300 here for Tesla, and for some reason we don't break it in the next couple of months, it's going to break it eventually. There's no doubt in my mind at some point we are going to break that. We're going to get to all-time highs, which is over $414. Um, so it's going to get there. And again, for you long-term shareholders, just hold tight. And I know some people get frustrated because they're like, well, how long am I going to hold for? Some people aren't buying anymore. Some people actually wanted to use Tesla at this point. This is why timing the market is so hard and why one of the reasons I switched over to dividends was I don't have to care about the stock price movements. If I'm getting income coming in and that income amount is what I'm focusing on and that doesn't change, who cares? Who cares what the stock price is? And actually, as a matter of fact, if anything, I want that stock price to come down because if I'm getting paid, let's say $1 per share on something that I own, and that thing that I own is $100, cool, 1% yield, not much, sort of like a Visa. But if all of a sudden that stock price comes down to $80, cool. My portfolio value may have just come down, but that income stays the same. And now I can pay $80 for $1 of income versus $100 for $1 of income. That's why I like that long term. And then when I'm looking at something like a retirement, that has built up over time and I have this passive income coming in. I don't need to sell anything because I have that money already there. As a matter of fact, if anything, I can grow my portfolio even more and make more money in the long run because I'm not selling off. Now, granted, maybe Tesla stock keeps on booming and goes higher and higher, and you can sell off enough to live off of, and your stock portfolio continues to go up. Totally possible, but that is a much riskier chance in some people's eyes, but that's going to be riskier than doing a dividend. It would be fueled by Kamala's tears. Jesus. Can Trump fire that judge in Delaware case against the Elon's pay package? I don't think so. Just like with today, the questions around Jerome Powell and Trump being able to fire Jerome Powell, it's very vague when it comes to the verbiage in there. Jerome Powell says he can't legally fire him, but the verbiage kind of leaves it up to Trump's discretion. So I don't think he can, and I don't think Trump would, especially if Jerome Powell gives the bullish stance here today that he gave us, continues that going forward, and kind of keeps on doing what he needs to do, and maybe gets us to that soft landing. And honestly, agree with him or not, Jerome Powell has gotten us to where we are right now in this whole entire journey. And unless he comes down and we see a crash and burn next year, I don't see any reason why he would get rid of Jerome Powell. Just let him finish off his terms. His term is up in May of 2026. So just let him ride it out. Personally, but again, Trump is Trump and he's just very much going to do his own thing. So we'll see how it goes. But when it comes to that judge, same thing with Jerome Powell. I'm pretty sure he doesn't have the control to be able to do that. He can appoint Supreme Court justices, but just firing judges, he does not have that ability, at least as far as I know, but I don't think he does. When you look into dividend stocks, what stats do you look at? Dividend stocks, cash flow, free cash flow for the majority of the dividend growth stocks. I'm not talking about actually even REITs that you want to look at AFFO. Sorry, that's adjusted funds from operations. So that's important for REITs. But when you're looking at other companies, um, just looking at free cash flow is important. It's one of the things that Warren Buffett talks about all the time is, you want to make sure a company has enough cash coming in to be able to pay out those dividends. And, when a company has free cash flow, they can do multiple things with them. They can go out there, they can, reinvest it back into the company, which is what most growth companies do, is reinvest it back into the company. They can do share buybacks, which a lot of companies are now doing as well, because that increases equity value out there because the pie is shrinking, or there's less slices of pie. So basically the slices of pie that you have are worth more. They can do, they can pay down their debt, which is obviously another thing you want them to do as well, as pay down debt, or they can do dividends. So free cash flow is the most important thing. You want to see a growing free cash flow. And to me, I think there's the most important stat you can look at when it comes to dividend stocks. Have a good night, Dominic. Perma moon, man. Yes, it's awesome. It's been a great day. Oh man. Yeah, and again, these are the times to really enjoy it. And one of the things I learned as well about creating the portfolio I've got, the strategy I have, and it's again coming from the Tesla background and dealing with a lot of the ups and downs and helping everybody through this emotionally, is how do you eliminate the emotional roller coaster? Because you don't want to invest with your emotions. That's the worst thing you can possibly do, is invest with your emotions, because you're going to make decisions that you shouldn't be making. And you may luck out every once in a while, but it's more often than not going to go well. So you want to figure out a strategy that is a emotionless strategy. And when you can do that, then it makes your investing life so much easier. Now, again, there's lots of different ways you can go out there. You can go into cryptocurrency, you could do swing trading, you could do day trading, long-term investing, which is what I do. You could do value investing. There are so many different ways to invest, and there you can be successful with all of them. So I just like the ones where I am so busy doing work, other things that are going on out there. I don't have the time to pay attention to the market all the time. Now, when I did, and I was paying attention to charts and things like that, I was relatively successful. But I've actually noticed that I'm more successful doing it this way than I was that way. I've seen that my portfolio is up significantly more, holding things long term. And if I do find that I don't want to hold a stock anymore, I'm more often than not up on it, and up significantly on it. So I kind of have that leeway to say, maybe I put a stop in, maybe I kind of give it a little more running room. Like, for instance, Oracle, I had in there, and Oracle, I ended up having a stop in, it sold out, and now it's jumped back up after everything we got yesterday. So I missed out on a little upside, but I still made 40% gains on it. I can't complain about 40% gains. And so doing it in the longer term, it allowed me to get to that point. So I just make sure that doing the investing the way I did it to keep my emotions out has made my life so much happier. I have a lot less stress, and I just have my portfolio that tells me, hey, I should buy at these levels. And actually, I'll bring it up now and I'll show you guys what I added to it. Tesla and Palantir up so fast. Yeah, Palantir up big time too. A few days, thin arrow relationships. When they will reverse. That's the whole thing, is, will they reverse? Nobody knows for sure. Chances are, I think they will. The valuation is definitely getting extremely frothy on both of them. Some will argue Tesla's not. Some will argue Palantir's not. I think in the near term, Palantir is. So it's probably due for a little bit of a cool off at this point right now. Some people say Tesla's not. And some people are arguing with Tesla that the reason it's popped up is because Elon, now being so close to Donald Trump, there's a chance that getting those regulations pushed through for FSD are going to come a lot easier now because of the fact that Elon's in there. Maybe it is, maybe it isn't. I don't know. Either way, Tesla still has to solve FSD to be able to get to that point. We still need to see if that's going to happen. So, regardless of what that is, we always see ups and downs in the market. Again, based on the timing of things, looking at the jobs reports, Jerome Powell seems to think that there's no issues with this, but looking at the fact that we see the jobs numbers still a little bit questionable at this point, kind of looking at we may see a good run into the end of the year because we're going to have seasonal hires, things like that. But when we hit Q1 and we have January jobs numbers coming out for the fourth quarter, showing what the seasonal jobs numbers looked like, and then showing that we're probably going to be losing a lot of those jobs in January, right around the time that Donald Trump is going to be taking over the presidency, could get ugly. And we could be seeing the jobs numbers coming down. And then if Elon has his way and they do a lot of house cleaning when it comes to the government, there's a lot of government jobs that were created over the last 4 years, which is a big reason why the unemployment numbers looked so good. So if we are starting to eliminate a lot of those government job numbers, we could be seeing some difficult times next year. And in turn, stocks like Tesla, Palantir, and the entire market are going to sell off. This is why I've been kind of creating that portfolio with a lot of cash flow and giving myself the opportunity to have this cash flow. And what's going on, Darth? See, and as we were talking, having that cash flow for next year, if we get a recession, you've got that cash flow, you can buy it. And one of the things we talked about last night was having those weekly payments is awesome. And that's one of the things I started looking at today is, in the conversation, he gave me the idea to, hey, how much can I have coming in? I like the weekly dividend payouts. Can I get more weekly pays? Can I get those monthly ones to pay out on a weekly basis? Like Yield Max have different categories that they've got set up. So different groups that they pay out in. So if you buy one of each one from each group, you can get paid out every single week. So you can get a weekly paycheck from your dividends to invest. If you have those coming in during a recession, barring those don't completely get obliterated, but if you've got that income coming in, you can now take advantage of the market, regardless of where it's moving up and down. You can take advantage of any opportunities on a weekly basis with that income. That is absolutely why I absolutely love it. Let's see. Tesla won't be held back from Biden anymore. Yeah. And now here's the dichotomy of it, because Donald Trump is going to be pushing for more oil and less EVs. We saw Enphase sell off. We saw all the other EV companies sell off massively yesterday because he doesn't support EVs like the left does, but he's got Elon. So Tesla did well because Elon is close to Trump. But if Elon wasn't close to Trump, I guarantee Tesla would have sold off yesterday. And that's kind of where you have to pay attention there as well, is who was actually holding him back. Was it Biden and Elon because Biden had the connections with Legacy Automotive and the what the heck is it, the UAW, or what was it? I don't know. But either way, we saw the run, and I think regardless, Tesla was going to do fine in the long term. So yeah, we are moving into easier monetary policy. I think slight dips, but no crash for Tesla. Best time to DCA, but 170 was when you needed to, yeah, those steel balls. Yeah, or when we pushed down to that, we had that gap at 146, and I'm like, I think we're going to fill it. And sure enough, we filled that 146 gap and then bumped up from there. And yeah, that was times to hold on to, or even when we crashed down to 100 a couple of years ago in 2022. But that's when I was buying. I was buying heavier at 100, and I made some good money on it. But yeah, we're going to see dips, and Tesla's not going to be immune to things like that again. So we're pushing 300 now. There's nothing that says we can't go back down to 220. Think about how quickly we pushed up to 300. Pretty fast. We can fall just as fast also. Yeah, it was definitely fun yesterday. Yeah, I'm going to be having them on a lot more often. So for you guys who want to talk about dividends and do more deep dives into dividends and learn more about them for income investing, I will keep you guys posted, because I loved our chat yesterday, and we're going to be doing that more often for sure. Also, keep in mind those tax credits are going away, and those crappy hybrids and startups will die. Much better for Tesla. And that's another point too, is the EV tax credits may very well go away. Elon himself has said that they don't need them. And, he's also said that Tesla can't do it all on their own to bring us to, a world of EVs and renewable energy. So the EV tax credits are helping Legacy Automotive and all these other companies to get to that point. But maybe in Elon's eyes, and things have changed because they haven't really been putting in the effort. Tesla basically put out all the patents and says, Here's how you do it. Just copy us. And nobody's done it. So if that's the case, doing away with the EV tax credits, maybe Tesla's like, screw it. I'll do it myself. If you guys don't want to help, I'll do it myself. And then in that case, getting rid of the EV tax credits will hurt Tesla initially just because interest rates still being high and losing that EV tax credit means that the cars are going to be more expensive. But that in turn, no other automotive maker in the US is profitable on EVs. Most of them in China also not profitable. So if that's the case, losing the EV tax credit is going to make it even worse. They're going to go completely to the wayside. Tesla bringing down the cost of all their vehicles, especially with next year coming out the new production platform to be able to cut down the cost of the production of the vehicles even more, is going to bring them to a point where they're now going to have very affordable competitive vehicles compared to ICE, which is going to create a lot less maintenance and a lot less expense for fuel. You have that. Now people are going to naturally go over to Teslas. And if the other automotive makers don't have anything to compete with Tesla, they're screwed. And that's why a lot of them started to switch over to hybrids, because they can get that middle ground. They can go to those people who are uncertain about going over to EVs and they're not sure about, they've got range anxiety and things like that. They can switch over to a hybrid. That's going to be the only saving grace for these legacy automotive makers, but that's only going to be a crutch in the near term. They're going to have to figure out EVs, or they're going to be gone, or they're going to have to part with each other or whatever. And I've been calling it for years now that eventually we're going to get to the point where they're going to have to partner up, and maybe like a GM ends up buying a Rivian, or maybe it's Ford buys Rivian, whatever it is, they start buying each other out to partner up because that's the only way they can survive. Yeah, exactly. Tesla doesn't need the subsidies. Everybody else does. And yeah, Tesla will take the hit initially, but if everybody else has gone away and people want an EV, they're only going to have one place to go, and it's going to be Tesla. I see. Guess good to more cash on hand by selling high flying Tesla, Palantir tech stocks before January. What about XOM and Chevron? So, I mean, selling them, it really depends on your strategy. Maybe selling if you want to swing like that. For me, I add to them. I haven't been selling much. And when it's riding high, I was like, all right, let it ride high. And I'll just wait for another buying opportunity when my portfolio tells me to buy. If it's really pushing high and I think I should sell and can make some profits, cool. Like I sold a little bit of Dogecoin the last couple of days on the pop to take that cash and put it into other plays. Otherwise, I'm not really much of a seller of stocks. But when it comes to ExxonMobil, I own ExxonMobil, love it. Chevron's another great play. I own Exxon and Occidental. And oil is going to be great, I think, in the near term, because Trump opening up, and here's another discussion where Trump opening up the oil pipelines and things like that here in the US is going to be great for the US to give us that oil security, which we kind of had the oil reserves depleted from Biden over the last couple of years. So that'll give us that security of it, but it'll also bring down the price of oil because there won't be the demand anymore. And we won't have that supply restriction coming from the other companies around the world. So might not be as great for the price of barrels of oil, but hey, it's been doing well so far for ExxonMobil. That's been going up in stock price, and that's kind of where I'm at. So I kind of dig where they're at. So I like the oil companies. I think they're going to be perfectly fine. Pop's going to give us a net worth update. But actually, I just did. I did my October one last week. I don't know if I actually specifically mentioned the net worth in there, but I went over my entire portfolio. I try to do it at the end of every month. So if you want to check that out, I definitely did one. I put it up last Sunday. Yeah, I mean, super excited. My net worth, I actually thought about the other day when I was doing it. My portfolio at the bottom of COVID. Now, before that, my portfolio was around $1,200, and COVID crashed everything down. So at the low, my portfolio was at $600. Today, my portfolio for just stocks and the cash that I have in my stock portfolio is $58,000. Mind-boggling. Now, yes, I did add money to the portfolio, but it's probably 2 years I was adding maybe $250 a week, a little bit more than that. But I was also putting a ton of cash aside to buy a house. So now if you take that cash that I put aside for the house and you include that into my entire portfolio, I'm at $98,000 for my portfolio when it was at $600 4 years ago. It's amazing what happens when you focus on paying off your debt and then start putting that money into into the stock market and investing and doing things wisely with your money and not just spending it frivolously. I'm a testament to that. And I'm going to start doing some financial coaching. I've got a coworker and a friend who are already coming on to work with me on financial coaching. So if you guys are interested, again, none of it's financial advice. First half hour is going to be free. And if I can teach you everything you need in a half an hour, awesome. Take it and run with it. Um, but I'm going to be putting up a lot of the educational videos on my website because I'm going to get that back up and running in the next couple of months as well. So I've got some work to do to make the videos for that to get it set before I start. But once I get that running, again, I'm just going to show you guys what I did. And everybody's situation's different. Everybody's going to take a different time frame to get to where they got to. And it took me 8 years to pay off my debt to get to that point to be able to turn my stock portfolio around. But still, doing that, it moves very quickly. High import tariffs help Tesla and ICE cars in US, but most US and EU EVs can't compete with China EVs just into isolationism trades. Yeah. And again, I think China, and Elon said it himself, the Chinese EVs are fantastic. They're phenomenal vehicles. They have phenomenal technology over there, but they're still not profitable on their vehicles. And if Trump is going to be jacking up the tariffs on the Chinese imports that are coming in over here, China's not really in the US market yet. I know that Neo has been looking to get an office space over here. And of course, the other companies are looking to come in here as well. But at that time, with the tariffs going up, they're going to find it very difficult to come into the US. So it's really going to be strictly US companies that are going to thrive in this regime. But it could also cause a lot of inflation that some people think, because causing those tariffs on that, they're going to come in, that's going to jack the prices up of that. Then US companies might say, well, then we can go up on our prices as well because the prices of those are going up, and that's kind of setting the bar. We have to see how that macroeconomic thing plays out over time, but those are just the different thoughts that are out there. Let me see. I'd rather buy Nvidia for their potential or Coca-Cola for the dividend. So I have Coke for the dividend, and I do love Coke. It's a steady Eddie, especially if we get into a recession. Great for downside mitigation, but the dividend growth on it, not great. I think it was like 6.5%, so still not terrible. But there's a lot of other great plays out there, and I think Coke is a great one. Again, I own it, so I have no problems. Anybody purchasing Coke. But when you're looking at like a Visa, MasterCard, Amex, things like that, who are growing double-digit dividends on a yearly basis, that's insane. And you're going to get equity appreciation. Now, granted, the stock price might move a little bit more than it would for a Coca-Cola, but that also means that you might get some better buying opportunities as well if we see it pulling back. So that's why I've kind of balanced mine out with plays like Coca-Cola to keep that downside mitigation and keep that risk there. And then I also have the visas to keep it, I give myself a little bit more of a leash to grow. Then I've got the higher yielding ones, which, just looking at that as an income source. Is your son keeping up with Tesla FSD improvements? He's probably driving a lot now. Oh, he's in college now. And even though he doesn't have his vehicle out there, he's got friends who have cars, and he's been driving their cars. But he's a gas guy. His grandfather on his mom's side loves Mustangs, so he grew up around a lot of the Mustangs, drag racing, things like that. And I love both sides of it. So he kind of enjoys it also, but he's at this point still a gas car kid. Once I get my Tesla and I show him off, I'm sure I can sway him a little bit back the other way, but I think he'll have an appreciation for both. Costco, Berkshire B, TXRH are go. Yeah. Yeah. Costco's another one that I love. And a lot of people say Costco's valuation is high, and it is, but you pay a premium and it just keeps on going up. And a lot of people do it because every couple of years they pay a massive special dividend. Like last year, they paid a $16 per share dividend. That's insane. And so people buy it just for that, and they pay the premium for it. So Berkshire Beer doesn't pay a dividend, but when you have a company that is investing like Berkshire does, you're going to get that equity appreciation. You know that they're going to be doing very well, and that company is going that stock is going to grow. Tesla is currently the only EV maker that can compete with China's EVs outside of the US. Yeah, That's it. Um, and that there are no other companies out there. Lucid and Rivian, I don't even know if they're going to survive. They've got a lot to go through, and if we get into a recession next year, it's going to be hard. And under this regime, both of them sold off significantly yesterday. They're not going to do well. Enphase also, renewable energy stuff, not going to do as well under Trump. Maybe Elon will kind of educate Trump on it a little bit more to help ensure that goes on, because that is, technically Tesla's mission, and that's their mission statement, is to help transition the world to renewable energy. So I'm sure Elon will put a bug in Trump's ear for that, but it may be more of a balance, because Elon has also said that the world still needs oil right now. You can't completely eliminate it, so may find a good balance moving forward. But yeah, man, that play outside of the US, that Tesla just dominates, and the EV makers struggling. Thank you, honey. If yes, please hit the like button, guys. And thank you. I have 50 of you on here. This is awesome. Love having these Thursday nights with you guys. Yeah, a few Chinese brands sell EVs or hybrids in Australia. Their EVs are very competitive with great features and batteries, cheaper than Tesla. Yeah, and China is moving into the EU. And obviously they will eventually make it into the US, but if there's going to be higher tariffs, it's going to be more challenging for them. But they might sneak things in, like maybe they'll get it into Canada if Canada allows it, and then people can maybe go over the border, whatever it is. It's not going to be an easy transition to get into the US, but they're going to go out there. They're going to grow their companies just like, US companies want to grow as well. And they do have a compelling product. Many of them do. So that is the only competition Tesla technically really has, because legacy automotive makers have basically cut way back on doing EVs and focus more on hybrids now. And Lucid and Rivian pose no threat whatsoever anytime soon, if they will ever. Remember, everyone, that inflation is high and will always be here. You need long-term assets portfolios to store the cash, look into the best viable options. Yeah. And so, and inflation, and that's the thing too, is, yes, inflation has come down, but we're most likely going to be between that 2.5% to 3% inflation, most likely. That's probably where we're going to be sticking around. And if the Fed has their way, we won't see rates come back down to zero, where we basically saw it for the last 15 years. And, some people like my dad will look back and say, hey, the norm for inflation is much higher, but is it? If the last 15 years were zero, is that the norm for inflation? Or is that the norm for rates? I mean, so don't know. I think what the Fed is trying to get to is between a 2 to 2.5% rate for inflation, and keeping the interest rates around that level. That gives us a nice steady growth for the economy at about 2%, because at that 2%, you're going to get that nice steady growth. Because if you have deflation, people stop buying because they're waiting. Well, if I wait, I can buy it for less tomorrow. That's kind of the thought with deflation. But when you have that nice steady growth of inflation of around that 2%, then everybody's going to just buy as normal, because they know eventually the prices are going to continue to go up over time at that nice steady pace. So maybe they stockpile a little bit now, but it doesn't matter. Eventually they're going to need to buy more, and it just keeps a smoother growth going over the economy. And that's kind of what the Fed wants to get to. And we're kind of there now when it comes to inflation, but the rates obviously are still super high. So they came down that 25 basis points today. Most likely coming down another 25 basis points in December. So that'll put us down around that 4.25% to 4.5% by the end of the year. Still a long ways to go. And if we're seeing unemployment numbers are starting to, get worse and worse, they may cut rates a little bit faster just to catch that up and try to spark that going forward. But if we end up getting into a recession, the Fed might have to panic and drop rates to zero, which is something Trump would want. So many unknowns over the next year. So yeah, again, and this, to Pop's point here, this is why I like the diversity. Look long term. We will get through this. Historically, you look back, we have always gotten through times like this. So it's not one of those things where this is, unless you think the US economy is going to completely crash and burn and we're going to completely fall apart as an empire of the world. If you think that's going to happen, then investing is not your thing. Go figure out how to forage and live off the land and whatever, or move to another country. But if you think that we're going to get through this, as we always have, this is just going to be an opportunity to buy. This is one of those great financial crises where it's going to suck for a lot of people. It's not going to be happy to go through. It's going to be horrible. People are going to lose their jobs. One of us watching this, or myself, might lose our jobs. You've got to be prepared and ready for that to be able to get through it. If you are one of the lucky ones who don't lose their job and you have repaired with a cash stockpile and a bunch of cash flow coming in to take advantage of these opportunities, whether you're going to be buying stocks, whether you're going to be buying real estate, there's going to be plenty of opportunities out there to really buy in at these lower prices to set yourself up for greater wealth in the future. That's what these situations can be for. That's kind of why I'm setting up my portfolio the way I am to A, if I lose my job, I have stuff to fall back on. B, if I don't lose my job, I can then take advantage of that and really flourish coming out of it. Canada will not allow Chinese EVs unless they has a 100% tariff on them. Oh, that is good to know, Hanif. Thank you for letting me know that. So I guess they're not going into Canada either. Probably easier to come into the US than Canada because I don't think that Trump's going to put a 100% tariff on Chinese goods. But dang, that's painful. Yeah, just making it difficult. And another thing too about China is the Chinese own a lot of land, a lot of farmland here in the US. Sounds like there's going to be a lot of that stopping under Trump. So I mean, I think that's a good thing. I think we should have a lot more domestic landowners here in the U.S. So I would not be opposed to that at all. Um, and kind of give some land back. And again, that goes to something we were talking about last night on these REITs. Is there's some REITs out there that do invest in farmland and just land in general. And if we're going to be seeing that transition back to a lot of U.S. owners, then that could be very good for some of those REITs. So it's something to pay attention to. Let me see what else. What else we had going on this week? So the election obviously is a big one. The FOMC, everything's moving. Tomorrow's my birthday, so super excited about that. I will not be doing a video tomorrow. I'm actually just going to take tomorrow night off because I have to work on Saturday. And I'm babysitting for my friends on Saturday evening after work. So I'm going to be busy the next couple of days. So I'm just taking a little birthday downtime for myself tomorrow. Pops, there's one Cybertruck in my wife's country in Guyana, and charging it took off everyone's took off everyone's power in the village for a whole day. Moral of the story: we are early boys. Oh man, I don't mean to laugh, but that is hilarious. And now, conversely, that Cybertruck could probably go and charge the entire village if it needed to. So if they needed power, they could just tap and plug into the Cybertruck and get all the power they needed. Oh man, yeah, and we are very, very early. That is one thing to pay attention to. And again, looking at just renewable energy, it's very, very early on in renewable energy. So even companies like Enphase, who took a 17% beating yesterday, pay attention to them. As long as they're doing well and their balance sheet is good, which it is a little bit questionable right now, but renewable energy is going to be a thing of the future. So just pay attention to what's going on. There's still going to be a lot of ups and downs, a lot of questions and regulations and policies that we have to get through to get to that point. But I think in the next 10 to 15 years, it's going to become much more normal for people to have that. So just pay attention to everything going on because it is extremely, extremely early in this game, which is why I also say that, whether you're buying Tesla now or you're uncertain and you want to buy it in 2 years, if you're going to be holding it for a minimum of 10, it really doesn't matter because I think we're still going to continue to go up. Picture it sort of like a Microsoft. Microsoft, obviously was around for a long time, did very well with the internet. So the 90s was really kind of the spark that took Microsoft off, and it just keeps on going up. It doesn't stop. It's a freight train that moves forward. Tesla could very well be a larger version of that if everything they're planning on doing comes to fruition. Tesla could very well be something even more something more significant than a Microsoft in the next 10 to 15 years. And Microsoft is still a buy today. So 20 years from now, Tesla, if everything goes as they plan, will still be a buy at that point. So that's just my take on it. Thank you. Thank you for the birthday wishes. I'm looking forward to it. So a little trick that I have for myself when it comes to my birthdays, and people ask how I look so young for my age, and I think I look probably average, but my brother's 3 years younger than I am, and I look younger than he does. But my trick is I don't usually celebrate my birthday. And I think that's the trick is if you don't celebrate it, it doesn't count. It doesn't count as a birthday. So I'm good. And I can keep staying younger because I'm not celebrating it. And it's not one of those things where I'm just not celebrating it because I don't want to. I'm a kind of person who doesn't wait for a specific day to celebrate things. If I feel like I want to buy somebody a gift or I want to treat myself to something, I'm going to do it. I'm going to do it if I feel like it. I'm not going to wait for a certain day because maybe on that certain day, I'm just kind of feeling under the weather. Or I'm like a little blah and I don't want to do anything that day. So when I feel like I want to celebrate, I celebrate. And if I keep on running my plan as it is, in 5 years from now, I'll be able to celebrate every day however I want because that is my plan and goal. So hopefully we get there. What's going on, Chicago? I know DCAing is the way to go, but I'm finding it really hard to buy Tesla after this huge run up. So this is why my portfolio. Actually, I will bring it up now to show you guys because I like to bring it up every single time. Do let me see. Get into here. Get in my financial tracker. I gotta reset that. Bum, 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 bum. All right. All right. ETF. Beautiful. Let's get this shrunky dunked down. Much better. All right. I'll get into this. Yeah, because I want to show you guys. So DCA, exactly how I feel the exact same way. DCAing is the way to go. Historically, DCAing is the best way to grow your wealth over the long term. And so for you guys who don't know, that's why I created my portfolio the way I did. This is my own personalized DCA strategy. So when I'm looking at something, and it's not just blindly DCAing into Tesla at 300. So for me, I have criteria set for all of my plays here. Now, my first criteria is my cash. And my cash I want to be at 10%. And with the run up that we've had, I'm now at 9.89%. So right here would tell me how much cash I have to spend. Right now, I have zero. So I have no cash to spend on anything that's out there. And I'm strict with it. And again, this keeps my emotions out. Because if I don't have any cash to spend, I don't spend it. And so then I go up to here to my next criteria. Now my criteria it's basically arbitrary. It's whatever I've created. So there's no real rhyme or reason behind it other than the ultra yields. I don't have any criteria set for yet. I will have at the beginning of the year. But here's my high yield ones. And my high yield ones I'm using as cash flow. None of these have drip. It's all cash that goes into that cash pile that I can invest wherever my portfolio tells me. Currently, I have that level set to $1,500. So it's basically like my overweight category. And that's where I set these at as 1,500. So what the heck? That was weird. Strange. Hold on. Let's try this. And then we're going to do this. Much better. Okay. So now we look here and we'll say, okay, so this is under $1,500. So I need to add $9 to Vici Properties. Cool. That's it. So when I have any cash, and it's top to bottom by yield. So when I have any cash, I need to add cash to Vici. And then I just work my way down the list. So then I have my longer term ETFs. So the yield is a bit lower on these, but these are things that I want to hold long term. And in the long run, I will have less of these because the tax implications on these are much higher than they are down here. These at least most of these are qualified dividends. So the tax rate is a lot lower on them. This is what I want in the long term. This category is set at $1,250. So anything under $1,250 I need to add to, which is all of these. Then we come down to my dividend growth plays, which is a lot more, but it's kind of just like I have most of these in these ETFs above, but these are like, you know what? I want a little bit more of these individually. Also qualified dividends. So I dropped this one down to $500 per category. And again, over time, as the top categories grow, the numbers will shrink and these here will bump up higher so I can put even more money into these as it goes. It's kind of like my reverse snowball. And so this again is my way to DCA. So instead of just DCAing into, and let's say, for instance, the Tesla. So down here, these categories are at $500 also, but Tesla's over 500. So I don't want to add to it. So right now I'm adding to Amazon because it's under $500. Now let's say we end up getting a big sell off on Tesla and it drops down to $240. Now I'm at 480. At that point, it will tell me I need to add to this. And now you may say, well, yeah, but what if it keeps on going up and never comes back? You're never going to add to it. Sure, I will, because eventually I will get myself to the point where I go to the next level. So this $500 minimum here will go to 600 and then 700 and then 800. And eventually along the way, there's enough ups and downs in the market where I will catch opportunities where I can buy this based upon my criteria. And so that to me is kind of my improved dollar cost averaging strategy. And so far, it's been working out extremely well for me. Now, I haven't had a chance to test this during any sort of bear markets. So maybe we get into that next year and I get to test it in a bear market next year. We shall see. But again, even some of the dips that we had, for instance, like on August 6th, when we got that dip there, I had a lot of opportunities to buy. The only problem I ran into was I didn't have enough cash to buy. And I didn't want to dip below my threshold for cash. So this is why if we do get into a recession next year, I may lower that threshold for the cash. Maybe I say, hey, you know what? These are the bottoms of the market. I don't need to have 10% cash. Let me deplete that down to 7% or 6% to, add more cash to the market. And I'll just kind of take it from there. But I'll feel it out if we get there and I'll let you guys know. But that to me is exactly why I set it up that way, was instead of just blindly putting it in at any price, which again, that strategy still works very well. Basically 401ks work that way. But for me, I did it as it's a wiser, more fine detailed and tuned version of it. Let me see. Uh, Buying less and don't buy when Tesla flies high in my case. Yeah, and anybody who's following for Tesla for any amount of time understands exactly that. Tesla has it swings up and down, and it swings up could keep on going up. We've seen it run for 21 days straight. Totally possible. But we also see it come back down. And so every run we've seen to this point has come back down every single time. It's why we're not at all-time highs right now. Just keep that in mind. Now, it's not guaranteed that's going to continue that way. Maybe we do continue to go up from here, but it's Tesla. We know that there's swings in both directions. So just pay attention to that. And pushing up as high and fast as they did, regardless of the company, typically comes back down because there's now massive gaps. Every company that jumped up significantly yesterday has a giant gap to fill. And none of those gaps that were created were gaps that were fundamental gaps. So sometimes you'll see a fundamental jump in a company in the stock price that that gap might not get filled. Gaps get filled 9 out of 10 times. That 1 out of 10 times is usually due to a fundamental change in the company, and it's never going to come back down to that level. Nothing yesterday changed fundamentally with any companies. So there's a lot of massive gaps to get filled down below us. Chances are we will sell off to get back down to fill most, if not all of them. So just keep that in mind when you guys are looking at opportunities to buy or whatever. Keep that in the back of your mind. All right, I'm going to duck off of here, guys. Been on for about an hour. Always love hanging out with you guys. And again, day before my birthday, great hanging out with you guys. So this has been awesome. Again, I won't be on tomorrow, but next week I'll be putting out videos this weekend. I'll definitely have one out on Sunday for you guys to give you an idea of what we can see for the market ahead. And otherwise, just keep being awesome, man. You guys are great. Love you all. And I'll see you guys in the next one.